Is Bitcoin safe in a trade war? Despite the seemingly haphazard way in which these tariffs were calculated, there is a reason countries use tariffs to support domestic industry. Putting the question of fairness aside, if, for example, the United States believes they must maintain a domestic steel industry for national security, they may place tariffs on foreign steel to protect those domestic industries, even though it's more expensive to produce in the United States, because it's a cost they are willing to bear. As long as that cost is well understood, there is no reason to play games about the objective. There will be a community of people receptive to that idea. The mistake the US government has made is assuming every trade deficit implies there must be a tariff on the other end as its root cause. There is no way that conclusion follows. If some small poor African country like Lesotho has a large trade surplus with the United States because they export a valuable raw material like diamonds that isn't found in the United States in large quantities, but are too poor to buy any expensive US exports, that won't be fixed by taxing those diamonds. If they can't afford your exports, they won't buy them no matter how high the tariffs become. You are just making diamonds more expensive for Americans. This is an example of a tariff with no strategic value, just pure economic loss. You could argue Americans don't really need diamonds and would be better off without them, but it's more likely they will simply buy more expensive diamonds from somewhere else, and everyone loses. There are a variety of opinions about whether these tariffs will actually cause the US trade deficit to shrink, probably because nobody predicted how stupidly they would be applied. As a result, I doubt any existing study on this matter is relevant. Also, the market probably expected them to be a temporary negotiating tactic to extract some ransom from foreign countries. But what if they're not so temporary? What if foreign countries instead respond by trading with each other and cutting the US out of future deals?
The system of global trade anchored on the United States that Canada has relied on since the end of the Second World War, a system that, while not perfect, has helped to deliver prosperity for our country for decades, is over. Our old relationship of steadily deepening integration with the United States is over. The 80-year period when the United States embraced the mantle of global economic leadership, when it forged alliances rooted in trust and mutual respect, and championed the free and open exchange of goods and services, is over. Well, this is a tragedy. It is also the new reality.
As unimaginable as that sounds, given the size of the US economy, that appears to be the trend. The United States consumes a lot and produces very little. But anybody can consume. Consumption is easy. Production is hard. This is very much a developing story, so we're discussing a hypothetical scenario. But let's do the thought experiment anyway. At a minimum, foreign countries no longer consider the United States to be a reliable trading partner and will be skeptical of any agreements signed in the future.
The USMCA is the largest, fairest, most balanced, and modern trade agreement ever achieved. There's never been anything like it. Other countries are now looking at it. This is a colossal victory.
Trump signed the USMCA in his first term and tore it up on false pretenses in his second. What happens to Bitcoin in the event these unintelligible and unpredictable policies result in a general unwillingness to do business with the United States? Bitcoin has been highly correlated to tech stocks in recent years, but so far in this drawdown, the price has been holding firm. Why? The market is opaque, so it's difficult to know exactly what percentage of Bitcoin purchases come from what type of buyer, but it's well understood that many funds used by ordinary investors for passive accumulation in retirement plans have been adding Bitcoin to their portfolios without anyone's consent. Of course, Wall Street firms are paid to manage these portfolios, so there isn't necessarily anything nefarious in that action, but it does imply outflows today will cause Bitcoin selling tomorrow. The United States has been and continues to be the safest and most attractive place for people around the world to park their excess capital. But the scenario we are considering is what happens should that trend reverse. A decline of US trade doesn't necessarily mean a decline in the attractiveness of US markets, but it does mean there will be less dollars flowing around the world to be recycled back into US markets. Almost certainly a drop in future growth, potentially a drop in the current investments, if there are better opportunities elsewhere. So what happens to those dollars if they are no longer flowing into US markets? Some of it goes to the government as taxes. Some of it just disappears as the economy shrinks. It's difficult to put exact numbers on any of this, but these markets are largely driven by capital flows, not old-fashioned ideas like valuation and productivity. Less capital flows, lower prices. That applies to all financial assets. Is Bitcoin different? It is different only in the sense that people advocate for it to be used as a replacement for US dollars in international trade and foreign reserves. But that hasn't happened yet. The most important question is whether the unpredictability of US economic policy will be the spark that ignites the desire to use Bitcoin for international trade and foreign reserves in the future. Markets are future biased. If that became a prevailing view of tomorrow, you might expect that to influence prices today. It's also safe to assume nobody who intends to accumulate Bitcoin will talk about it until they do it, so they don't cause the price to go up before they buy. Once people start advocating for something, it's safe to assume they have already done it. So we can't necessarily go by public statements to form our opinions. Here is the bottom line. Do central banks operate like investors? No, they don't. If I'm a central bank, my objective is not to generate profit for the government. Central banks are not hedge funds. My objective is to ensure stable economic growth, low unemployment, low inflation, a predictable currency exchange rate. So as long as people in the regular economy are still measuring everything against the dollar, there is no reason for them to adjust reserves. Central banks are not likely to lead any such transition. They will follow. Bitcoin would need to be used in transactions first before anything changes. What about international trade? Well, if I'm only using dollars as a means of transferring value across borders, but I'm not intending to hold those dollars for long, I don't particularly care about markets, especially not stock markets. Again, the purpose of that transaction is not to make a profit. It's just to move funds. Typically, as markets crash, the value of the dollar goes up anyway. Tariffs don't affect those transactions, at least not yet. International trade in dollars is far more likely to be affected by sanctions and seizures. We'll see how far this trade war escalates. What about sovereign wealth funds? If there is a general trend of reducing US exposure, that implies there must be an alternative. Could Bitcoin be part of that mix? If it will, they certainly won't be telling us in advance. So let's examine their incentives. Do they care about profits? Yes. Will they appreciate the ability to hold Bitcoin outside US markets? Yes. But where does the money they put in the sovereign wealth fund actually come from? Remember, the scenario we are describing is a surplus of trade with the US. If those surpluses go away, with what money will they actually buy the Bitcoin? Also, take into consideration these funds may be required to reconfigure their own economies to be decoupled from the United States. So even if you assume they will sell US assets to raise cash, is it more likely that cash will be invested locally or spent on Bitcoin speculation? As they sell their assets back to Americans to fund their infrastructure projects, there may be a temporary inflow of dollars back to the US economy as they are spent, but I assume most of those assets would have been purchased by Americans using debt. So ultimately, that money will eventually end up back at the bank, not in Bitcoin. The big wildcard here is whether the US government under President Trump will try to create its own sovereign wealth fund. It's difficult to imagine the US government going around buying assets in foreign countries the way foreign countries do in the US. So will Bitcoin be part of that mix? This one is harder to argue against. They can print as much money as they want, destroy the dollar, use the increasing price of Bitcoin as further justification to buy more Bitcoin. It's a self-fulfilling prophecy. That's really the nature of any Ponzi scheme. It all works beautifully on the way up. But what is the point of a sovereign wealth fund that generates no income and can never be sold? Not much. But the current government may not care if they're not in power when it all crumbles, and they get personally wealthy in the meantime. If you found this content helpful, please consider liking the video and subscribing to my channel. It really does help get this channel more exposure and keep me motivated to produce more content.